Today we're discussing infinite banking. When you use the infinite banking concept in Canada to build an independent banking system, you reclaim the banking function from outsiders and take control of your financing needs using the same principles that you would get at a bank. The infinite banking concept essentially teaches you how to become your own banker and develop your own banking system using dividend-paying whole life or universal life insurance as the financial vehicle or tool. This doesn't mean a bank in the conventional sense, but the power of dividend-paying whole life insurance or high-yielding portfolios within a universal life policy to solve your need for financing throughout your lifetime and create a financial system that replaces the traditional banking one. The infinite banking concept is not a financial product. It is the blueprint for you to create a lifestyle that you dream about, but have never made happen. If you want to take control of your finances away from the banks, while dedicating yourself to a lifelong plan that will see you through retirement and beyond, then this concept may be for you. Everyone knows that dividend-paying whole life insurance or high-yielding portfolios within a universal life policy provides you with tax-free death benefit. But it also provides you with living benefits in the form of cash value within the policy. This cash value allows you to build long-term equity through predictable and secure contractually guaranteed growth or highly managed portfolios, which will then provide annual dividends or excellent growth. Your cash value and the death benefit can be accelerated using your dividends to purchase paid-up additions. Paid-up additions are extra premiums or insurance that you pay for once and never have to make another payment again. Think of them as kind of mini policies stacked on top of your original base, with dividend-paying whole life insurance policies fueling everything. These mini policies can also earn dividends. So using dividends to purchase your extra premiums or insurance becomes a powerful way to build up accessible liquid equity within your policy. And yes, you can have multiple policies. The more policies you have, the better. So think of the infinite banking concept as either a superfunded or overfunded dividend-paying whole life insurance policy or a superfunded universal life policy with an investment portfolio within. When you pool these concepts together, the policies provide you with savings and cash flow that you can use to build your own bank. No strings attached. An infinite banking concept type of insurance policy provides you with a tax-free sheltered savings vehicle that lets you make, keep, and multiply your money more safely and efficiently than any other traditional investment can rival. It eliminates complex loan applications, credit checks, and rigid repayment systems. In fact, you can borrow up to 90% of the cash value in the form of a policy loan to self-finance whatever it is you need, whenever you need it. When you borrow from your policy, you're using the policy as collateral. In simple terms, you're borrowing from yourself and then paying yourself back the principal and interest. Even if you borrow from the policy, your principal remains locked in. The money in your cash value continues to grow uninterrupted and tax-free, as if you never borrowed from the policy in the first place. And here's another perk. You get to set the terms of your repayment plan because your infinite banking concept type policy is an asset that you own and control. As a policy owner, you have full contractual authority, which means when you request a policy loan, it is issued to you by the insurance company unstructured, giving you control over the terms of repayment and the schedule thereof. Now that is something to bank on. Like more information? Give us a call.